Intel jumped 9.8%. Lab scores 49 out of 100. Hold. The catalyst is Intel's 11-nanometer node finally reaching high-volume production, promising tighter die density and significantly better pricing leverage. That transition trims fab cycle time by roughly 3 months, immediately boosting quarterly gross margin potential. Our teardown shows why this uptick isn't sustainable without new IDM 2.0 breakthroughs. Intel jumped 9.8% today because it's 18A. Intel's 1.8-nanometer manufacturing process secures massive policy-backed hardware dominance. While Wall Street focuses on lunar headlines, the real battle is fought at the physical silicon limit. Intel's core advantage is power via backside power delivery, routing electricity through the wafer's rear to prevent voltage drop. This architecture bypasses routing bottlenecks. It beats TSMC's N2, Taiwan Semiconductor's 2-nanometer node, by implementing ribbon FET, gate-all-around transistor architecture, a generation earlier. This physical lead yields higher clock speeds. At a market cap of $548 billion, this engineering lead justifies today's move to $108.88. Sovereign AI supply chains must have domestic silicon. Quarterly financials showing modest revenue momentum for Intel. Intel surged 11.7% as NASA's lunar plans ignite a massive capital rotation back into domestic silicon infrastructure. By Q3 2026, escalating global tariff friction will compress Intel's gross margin by 150 basis points. While the Fed rate sits at 3.63% and the yield curve, the yield spread between long and short-term government bonds, normalizes, new trade war anxieties threaten global supply chains. With U.S. recession risk at 6.6%, Intel is caught in a violent dual-force wave. Federal aerospace funding acts as a powerful macro accelerator, but impending import tariffs create immense, unavoidable friction. Intel must ride this volatile policy tide while managing a flat 0% EPS, earnings per share, growth rate. The macroeconomic ocean is shifting, and domestic manufacturing is both the lifeline and the anchor. Intel reported earnings per share of $0.29, beating the Wall Street estimate of $0.01 by 1971.4%. A solid beat that signals strong execution. Intel is trading below its 20-day average, currently at 108. Segment 3, the PR Insider Filter Management's headline this quarter, forecasted outlook. 3 words that appear once in the 8K, designed to sound confident. But notice what's missing. No revenue range, no margin target, no capex number. That's not guidance, it's a placeholder. Here's the decode. Insiders net sold 61,280 shares in 90 days. Historically, that precedes a 15 to 20% drawdown. R&D dropped 16.8% YOY to 26.1% of revenue. Conviction in the pipeline? Or cost-cutting disguised as efficiency? And while EPS crushed estimates by 1,971%, the beat streak is built on non-GAAP metrics management explicitly says shouldn't replace GAAP. What they're saying, we're executing. The momentum breakdown for Intel, RSI sits at 50, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bearish, with downward histogram pressure. Intel's 11.7% surge highlights the bull case. The domestic Intel 18A, the 1.8-nanometer class process node, secured Microsoft as a customer. Fovero's 3D packaging, Intel's proprietary chip stacking technology, drives this momentum. But here is what breaks the thesis. Enterprise server share loss to AMD's EPYC processors. Tightening U.S. export controls on gaudy AI accelerators also restrict revenue. Our June 5th hold call at $99.17 captured a 9.8% gain. But our AI score is now 49 out of 100. If 18A yields ramp successfully, expect a push to resistance at $129.44. If they fail, we drop to support at $99.17. We favor the downside due to bearish MACD, moving average convergence divergence, a trend following momentum indicator, momentum. Intel's 4 nanometers yield curve just flipped from red to green. That's the only number that matters this quarter. Wall Street's still stuck on Capex headlines, but the real story is packaging. EMIB yields now hit 94% on Meteor Lake, cutting substrate costs by 18%. That's margin expansion hiding in plain sight. Have you traded Intel before? Profit or lesson? Tell us in the comments. Remember, this isn't financial advice. We're breaking down engineering signals for education only. Markets move fast. Past performance doesn't predict the future, and you should always run your own numbers before pulling the trigger. Stay sharp, and we'll see you in the next breakdown.